It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
It's really interesting that it is the great Australian dream, but so many people know so little about what they need to do. You'd be crazy not to get a tax depreciation schedule done. It will reduce the tax, it depreciates the property and gives you a really clear understanding of, how things are depreciated and what you can claim back.
And that is Anthony Webb from Belle Property, and we'll be talking to him in just a moment. And welcome into our Tuesday morning, February the 11th today, and to another real estate podcast, as always, talking about your property, your trends and what is happening from Darwin to Canberra. You can hear us on multiple platforms, including iHeartRadio, Spotify, Apple Podcasts and Amazon. Now, millennials, they are redefining the great Australian dream at the moment, many of them outpacing boomers in the property investment by embracing strategies like rentvesting, co-investing and targeting regional hotspots. PropTrack reported investor loan commitments hit $11.6 billion in September of last year. That is a 29.5% surge, and some Sydney-based investors have turned to the likes of Victoria's regional markets like Bendigo, offering millennials strong rental yields. Now, we're going to talk about that in just a moment, so let's bring in Anthony Webb from Belle Property. He is the head of Victoria. And a very good morning to you, Anthony. Welcome into the Real Estate Breakfast this morning. Great to have you on.
Morning, Craig. Thanks for having me on.
So how many of these offices there in Victoria are you responsible for?
Well, I guess in my role, Head of Victoria, Tasmania, I look after 47 offices across Victoria and Tasmania. So gives us a really good spread across the Victorian market.
What would be a couple of things for you to navigate with all of those offices there in Victoria for 2025? Anything standing out?
I guess my role is to work with them all individually, and every market's a little bit different. But I guess the commonalities that we're seeing at the moment is, really a little bit of uncertainty in the marketplace. Clearly, people are waiting at the moment for that interest rate cut to come. And I think once that happens, we'll see a little bit more property come to market and a little bit more confidence. But then I think we've got an election looming this year as well. So that always creates a little bit of a pause in the real estate market when we enter an election.
Yes, so the political landscape, that is certainly going to weigh in, as you say, for the real estate calendar year for 2025. As I mentioned, millennial investors, they're moving away from some of these high-rise apartments in favour of townhouses and units in some strong locations. First-home buyers, they're moving to these regional areas. This is straight down the line for you, isn't it? Bendigo. If you look at that particular market, it seems to be bucking the system.
It is. We deal with quite a few regional offices across Victoria, and Bendigo is definitely, a town that's bucking the trend. I think the infrastructure in place there is sort of holding it in really high esteem. It's on the train line to Melbourne, universities, hospitals, and it is quite cosmopolitan in terms of some of those regional towns. So we are seeing a lot of that investment from, first home buyers, rent investors, and particularly people interstate as well. Across the landscape for regional Victoria, it is a little bit up and down. It's a little bit like a washing machine at the moment.
You say it's more cosmopolitan Bendigo. People will say, really, Anthony? Is it?
I think if you haven't been there for a while, it's definitely worth going and having a look. There's a lot of really cool restaurants, cafes that have gone into the area. It still has that beautiful period charm in a lot of the areas as well that we're seeing go through that regeneration and renovation.
Yeah, that's the point, because people can be living in Melbourne and they haven't been to Bendigo for 10 years. I mean, if you're right now listening to the podcast, you're in Melbourne, you haven't been there for a while, count the years. Might be 10 to 15, and then suddenly you've got Anthony saying it's a little bit more cosmopolitan these days. Go for a drive. That's the best way to sort it out, isn't it?
Well, I think so. And I think we see this in suburbs in Melbourne as well as sort of the regional towns. But I think the suburbs go through a rather large demographical change. And clearly with COVID, we had a lot of people who were doing the tree change and moving out. We've seen people moving into homes and sort of renovating them, taking them back to their former glory. And that can really transform a town or a suburb really quickly.
What about the rent vesting? Let's get back to these first home buyers. Is it a smart pathway to home ownership? Of course, they do kind of struggle with this, I think. That is the first home buyers, because they really want to get into their own home, but many of them are turning to rent vesting as a way to sort of get on the property ladder.
Craig, I think rent vesting is probably one of the smartest things first home buyers can do. I mean, I did it myself, so I'm probably a little bit biased, but I think it's an opportunity where you can buy a property, you can put some tenants in, you're not necessarily having to pay the full mortgage yourself. I think if they're smart and look for the right type of property where they're going to see some capital growth, when they get to the point where they want to potentially sell it, move into it, or take that next step, they've got the capital growth along with the hand with the mortgage along the way. That allows them to take that proper step into the real estate market as well.
We are talking this morning to Anthony Webb from Belle Property. He is the head of Victoria. We'll talk more about first home buyers next.
Let's fuel your passion for property together. Join us, along with our industry experts, to help inspire and inform your next real estate decision.
And right now it is time for another property tip. Yes, we are heading off to Queensland this morning and catching up with Tina up there from Harcourts. And you've got a property tip. What is it for us this morning, Tina?
Yes, thank you, Craig. So obviously when you're looking to sell your home, you might be trying to coordinate multiple trades to get painting, electrical, maintenance, gardening, cleaning done. My tip would be to try and find an agency that has an internal property maintenance division, so that when our agents go out and meet with sellers, there's a conversation not just about selling the house, but doing all the trades internally, and it's all managed by one person in our team, so that as a seller, you're not dealing with multiple personalities and multiple trades. You're just talking to one person to ensure that the property is presented absolutely perfect for when you go to market.
We don't just report on real estate news. We take you to the source of the information. We produce more property podcasts every week than anyone else. We are your trusted guide for all things real estate.
And it is a Real Estate Tuesday. Anthony from Belle Property is with me. We're talking all about the regional areas this morning, and Bendigo seems to be a bit of a standout spot. If you haven't been, like we said before the break, make it a point to drive into Bendigo and check it out. Anthony, first home buyers, they've got to be highly organised. They've got to have a whole ton of things organised, don't they, before they even approach getting into the property market. PropTrack highlighted that many millennial investors are missing out on significant financial benefits. And they give this example of a brand new 3-bedroom house which could yield $10,000 to $15,000 in deductions in their first year alone. But not all seem to understand the depreciation and the tax incentives. Once again, it comes down to the basics. You've got to talk to the right financial people.
I completely agree. I think it's really interesting that it is the great Australian dream, but so many people know so little about what they need to do. So tax depreciation is definitely, we spoke earlier about rent vesting, but if you are rent vesting and you own an investment property, you'd be crazy not to get a tax depreciation schedule done. It will reduce the tax, it depreciates the property and gives you a really clear understanding of, how things are depreciated and what you can claim back. So I think if you are rent vesting, that's 100% one of the first things you should do is go and get that done. I think some of the other things is, I think a lot of the young people will potentially just go and use the bank that their parents have been using because there's a track record there. So I think another way for first home buyers to save some money is to really go and do their research, go and see a few mortgage brokers, make sure that they're getting the best deal in the marketplace at the moment. And banks are really competitive right now. So, the difference between just going to a bank and sort of negotiating and getting a good deal could save you thousands of dollars a year as well.
Yeah, and we talk about the depreciation. Of course, many people going across state lines. So just make sure that you know the regulations, because different states, different rules, different regulations, different tax breaks, etc. So do your due diligence, I think, is the key to all of that. And with the banks, yes, we've got these rate cuts that are coming up. How much of this sort of co-investing are you seeing where people are are pooling their resources with friends or family so that they can split deposits and the costs. And it's all about, I guess, just making it a little bit easier in securing real estate.
It's something that's happening a little bit more. I wouldn't say it's 5% of the market or even really 1% of the market at this stage, because I think it's relatively new. And if you're going to enter into an arrangement like this, it needs to be someone that you trust and you know relatively well. But I think the barriers of entry into purchasing a property in real estate these days is really difficult. The stamp duty, particularly here in Victoria, is so high that doing anything you can to sort of get in and sort of get that capital growth and get your foot in the door, get a track record and get some equity behind you is amazing. So this co-investing is probably something we'll see a little bit more, even if it is just parents helping their children buy a property by co-investing with them rather than just giving them the money. I know my wife and I sit there from time to time. I've got a 9-year-old and a 12-year-old, and we sort of think about, okay, how are our kids going to get into the market? What do we think we need to do to help them get into the marketplace? And I think this is a really good place to start.
Anthony, before I let you go, last week we were talking to Charlotte, who's the CEO, all about real estate, people getting involved in the real estate market. I would imagine that this is a very big part of your job. The attraction factor, I mentioned that 2025 probably a good year because of the rate cuts and what that will do to the market.
I think it's a huge focus. We've seen a lot of people leave the real estate industry over the last few years, particularly property managers and salespeople when things get a little bit tough. I think a lot of people, when they're entering into real estate, think that it's an easy way to make money and don't understand that, the effort and sacrifice you need to make to be a successful real estate agent. That being said, one of the things we're really working on are those career pathways here at Belle, and I think we're going to see more people enter the real estate industry. And I think it's our job as a company is to help people through that pathway and not only just get into real estate and get out, because I think, in my experience over the years, if 3 people enter, the sales arena, usually 2 are out within a 3-year period. So what we want to do is create pathways where people can come and join Belle Property, Hocking Stewart, really follow through our pathways and set them up for success rather than just throwing them in the deep end and hoping that they succeed.
Good on you, Anthony. Thank you so much for breaking a little bit of that regional market down for our listeners this morning. Hey, enjoy your Tuesday. Thanks for coming on to the Real Estate Breakfast.
Thanks for having me, Craig. I really enjoyed it.
It's the Real Estate Podcast, talking properties from 6 a.m. every day, from every corner of the Australian real estate market.
One of the biggest mistakes that I see people do, and it just shows the competition where you're at, is bringing out your calculator and calculating things right towards the end there, because it just shows that you're coming to your limit, and that next bid that they put in could really knock you out.
I've spoken to a lot of auctioneers over the years and have to say that calculator, that's the first time I have heard somebody talk about that. What an obvious thing that is. As soon as you said that, I thought, wow, that is so obvious that somebody is coming to the end of their budget. That is so dumb if you do that.
And you'd be surprised at how much it happens, Greg. I see it in many auctions all the time. And if I'm working with a buyer, I'm trying to have those conversations saying, guys, let's put the calculator away. You don't want your competition to know.
We connect you to the best real estate information across Australia. The Real Estate Podcast.